Hi, my name is Mia. Welcome to Scrubs and Savings. Today we're going to talk about credit cards, including what they are, how to use them, and how to maximize your credit card rewards. So a credit card is a financial tool that you can apply for from a credit card company or a bank that will allow you to borrow money to pay for everyday purchases. However, you can't just keep borrowing and borrowing money. You would have to pay back the amount that you borrowed for those purchases at the end of the billing cycle on time and in full to avoid paying interest as well as any fees. The first thing to do when you are picking out a credit card is to select a card that suits your spending needs. For example, people may prefer a cashback credit card that provides more cash back for everyday purchases like groceries and gas, or you could go to the other route, which is travel rewards points, which gives you points for your purchases that you can redeem for travel. The next thing to know about credit cards is understanding the fine print. This includes the credit limit. So the credit limit is the maximum amount of money that you are allowed to borrow on the credit card. It's basically like your spending limit from the bank every month. For example, one of my credit card limits is $3,000, which means that I can make purchases up to that certain amount. However, if you do go over your credit limit, your card may be declined and you will have to pay extra fees for going over your spending limit. The next thing to know about your credit card is the interest rate on it. A credit card interest rate is the cost you pay for borrowing money on your credit card, which is expressed as a percentage. The only way that you would get charged this interest is if you don't pay your balance off in full at the end of the billing cycle once you get your credit card statement. So even if you made the minimum payment for that statement balance, the credit card company will still charge you interest on the remaining amount. There are also fees related to credit cards that you may have to pay to use a credit card or due to credit card misuse. Common credit card fees include an annual fee, which is the yearly charge for using a card. There are also late payment fees, like I said before, in which you get charged a fee for not paying at least the minimum payment by the due date. Like I said before, there is also a fee called the overlimit fee, which you would get charged if you spent money over your credit limit. There are also cash advance fees in which you get charged for withdrawing cash from your credit card. A foreign transaction fee, which you would get charged if you use your credit card in another country or for purchases in another currency. And lastly, you may incur a balance transfer fee if you transfer a balance from one credit card to another credit card. So understanding all of these components of owning a credit card can help you avoid unnecessary costs. So make sure to read all of the information about whatever credit card or credit cards that you are using. The next thing you should understand about a credit card is the billing cycle as well as your credit card statement. So a credit card billing cycle is the period between billing statements, which typically lasts about 30 days or a month. And during this time, any purchases, payments, and interest charges and fees are recorded by the credit card company. And at the end of the billing cycle, the credit card company will send you a credit card statement. So a credit card statement is a summary of all of the transactions you made throughout the billing cycle, and it contains your account summary, which includes your total balance, available credit, and your credit limit, your payment information, including the minimum payment due, the payment due date, as well as any late fees if applicable, a transaction list, which is a detailed list of all the purchases, payments, credits, and any fees or interest charged, like I said before. And lastly, it may include a reward summary in which it shows the points or the cash back that you earned during the billing cycle if applicable. Whenever you get your credit card statement, you should review it as it helps you keep track of your spending, ensures accuracy, as well as would help you identify any unauthorized transactions. The next thing that you should know about credit card usage is that you should be paying your credit card statement in full. Paying your statement in full is one of the most important things to do when you are using a credit card because it helps you avoid interest charges. When you only make the minimum payments on your credit card, the remaining balance accrues interest, and it can quickly add up and lead to you having credit card debt. Paying your credit card in full also improves your credit score as it lowers your utilization rate, which we'll talk about in a little bit, as well as it shows that you can responsibly manage your credit. The next thing you should know about credit card use is the importance of never missing a credit card payment. If you did miss a payment, you would have to not only pay late fees, but your interest on the credit card would also increase, and it would also decrease your credit score. Harm to your credit score also harms your potential of future loan approvals, as well as favorable interest rates on loans such as a mortgage or a car loan. And some landlords may take a look at your credit score, as it does show your financial responsibility, and if it is lower, it may impact your ability to rent an apartment in the future. Persistent missed payments may also lead to debt collection efforts. If you don't pay off your credit card debts, debt collectors can escalate you not paying your debts into legal action, and the court may decide to make a judgment against you. If this were to occur, it may lead to wage garnishment, in which an employer would withhold money from your paycheck to pay off the debt, or it may cause a lien on your property, which is the legal right to possess another person's property until a debt is repaid. The next thing that you should know about credit card use is to keep your credit utilization below 30%. So your credit utilization is the percentage of the amount that you have spent on the credit card compared to your credit limit. As I said before, one of my credit card limits is $3,000, and let's say I made purchases up to $300 during the billing cycle. That means I would have a credit utilization of 10%. The importance of credit utilization is that it plays a significant factor in calculating your credit score. And the reason why credit scoring models emphasize credit utilization as one of the major factors that can improve or decrease your credit score is because it demonstrates responsible credit management. And although the under 30% is a commonly recommended guideline, an even lower utilization rate can positively increase your credit score. Since your credit utilization highly impacts your credit score, it's essential that you continue to monitor how much of your credit that you are using and try to keep it as low as possible to improve your credit health. I don't think I can stress how important your credit score is. And regarding your credit score, you should keep track of your credit score on a regular basis, as it provides insight on your financial health and affects your ability to secure favorable loans. A good credit score can lead to lower interest rates and better terms, which would effectively save you money in the long run. Regularly monitoring your credit score can also help you detect errors and fraud early, which would allow you to take measures to promptly correct them. Knowing your credit score also enables you to gauge the impact of financial decisions on your score and take steps to improve your score if necessary. Lastly, and one of the most fun parts of having a credit card, is taking advantage of credit card rewards. So the basics of credit card rewards is that it helps you earn value on top of your spending. So every time you make a purchase, you may earn points, miles, or cash back on your purchases. This effectively gives you return on your money, which you would have spent anyway. A lot of credit cards offer bonus rewards for different spending categories, such as groceries, dining out, travel, or gas. Using the right card for each category can help you maximize your rewards earning and maximize the value of your spending. Many credit cards also offer perks such as travel insurance, rental car insurance, airport lounge access, and discounted or free hotel stays. Additional perks include extended warranties, fraud protection, and price protection. For credit cards with cash back, you can either deposit the cash back directly to your bank account, or you can use the cash back as a statement credit to offset your credit card bill. Some credit cards are also affiliated with loyalty programs, which can offer exclusive discounts, redeeming your rewards as hotel stays or flights. And as I've said before, it is really important to pick a credit card that aligns with your current spending habits so that you can maximize your benefits from the credit card. If you want to learn more about the benefits of credit card rewards, I highly recommend watching Daniel Braun. He goes so far into detail about how you can maximize your rewards and the plenty of different credit cards that are out there. Although the use of credit cards can be very beneficial due to the rewards and cashback that you can receive from them, it is important that you pay off your credit card balance in full and on time every month and keep your credit utilization low, as those really impact your financial health, as spending above your means on your credit card can lead to credit card debt. I hope this video was informative, and make sure to send this video about credit cards for people who are just learning the ropes. And thank you for watching this video all the way through. If you did, please like and subscribe, and I'll see you in the next one. Bye.